Let me put that microphone on. Welcome back. It is February 24th. My name is Levi Woods. This is Drawbridge Finance. It is Tuesday. It's my favorite day of the week because we get to do some trades together. I hope you guys are having an awesome day. See Terry's joining from Alberta. Perfect. Thank you so much, Terry, for always joining me. It's fantastic to have you here. We are getting into some stuff. Thank you for whoever left the like. Remember, anything we talk about here, not financial advice in any way, shape, or form, just what I'm looking at, what I'm doing, what I'm trading. So hopefully we get some good ideas. If you guys have some tickers you want to take a look at, we will do that whenever you like. And we're going to get right into this. I've got TradingView loaded up. So let's jump over to the TradingView platform. We're going to look at SPX up 0.8% today. We can see this over on the right. And this is the S&P 500 index. We've got, a couple of candles. We've been kind of playing inside of the range over the last couple of days. If we zoom in and take a look at how big these candles are, we can see that the price action has been kind of within the expected sort of range recently. So we have, a green day, and then we have a red day that's kind of equal, and then we have a green day. So we're just kind of chopping along. This is what we consider consolidation. So this is when a market is moving sideways and it hasn't quite picked direction. Now, US dollar's up a little bit today. This is definitely helping the indexes a little bit. So NQ, similar sort of pattern, S&P 500 NQ are both quite highly correlated. We are trading below this ascending triangle that we have marked on here. That's these purple lines. If I was to scroll out here a little bit, we see this pattern. And again, this is indicative of a consolidation phase where we see price action move to the right and not necessarily picking a direction up or down. Now, the indication as of late, going back to the end of October, is that we're in a downtrend. So we see this, but actually, if you were to draw some lines on what the trend line is actually doing, we're chasing this along. This is still on a very slight uptrend over the course of time. If we look, this blue line here, this shows us that we're moving up slowly. This becomes a very important time where we're trading just above this. If we see continued weakness and we push down lower, then this is where the trend kind of reverses and goes down lower. But as of right now, I think we're in a consolidation phase. We're seeing actually higher lows from December or late November. And we don't know which direction the market's going to go, but it could go either way. Now, if we look at the Russell, it's in a different type of phase. We're definitely seeing small caps benefiting from the potential of having lower interest rates. And so that has been on a much stronger uptrend. With these trades, I typically make sure my break even is even lower. So I'm looking at break evens that are lower than if I was playing something like NQ, even though the pressure's slightly to the downside on NQ already, because I know that it could just change very quickly. Now we'll look at the VIX. The VIX has been elevated. We're seeing that elevated VIX level. The red line kind of marks a line in the sand about where our volatility is relative to the average price. And that red line represents the average over a long period of time. So when we have heightened volatility like this, what we're doing is we're typically looking for high volatility plays. Now, high volatility plays are such that we're selling premium. The idea is that when we sell premium, there's extrinsic value. And when the volatility comes out of the market, that extrinsic value depletes rather quickly. So when we're above this average, especially when we're above 20, we should be considering putting on shorter duration, higher volatility plays. Now, high volatility plays include like condors, spreads, things like that, strangles. If you're into playing naked, there's all sorts of different strategies that we can do. US oil continues with its upside pressure. Supposedly there's going to be a meeting with Iran and the Americans, and we're going to see what kind of is happening there on those fronts. But prices of oil are continuing to push higher. We're seeing a tiny little pullback today, 0.7%, but in general, we're sliding to the upside. Now, gold has been coming back up these last couple of days, having a tiny pullback down 1.3%, and then silver down 1.5%. On the short duration, gold has actually been slightly underperforming gold. Sorry, gold has been slightly underperforming silver. So if we look at that kind of pairs ratio, Let's look at some of these bigger stocks. We've got Apple kind of regaining momentum back up to its point of control. So if we look at this, how this white line that appears in TradingView, if you have these settings on here, this gives me my volume profile horizontally over a timeline. So we can see there was lots of trading down here, but that happened back in the summer of last year. There has been more trading around this 270 level than there was at like say the 260 level or the 265 level. And we can see that acts sometimes as a magnet where the price will come back up near that point of control. So we use these markers to help gauge our potential. Now, if you look at something like TDT, it's on a very, very systematic downtrend. So these companies, this one may be AI related. TDT creates media. They get media from advertising, they make media for advertising and they make money off of advertising. AI may be affecting this sector. I'm not sure where the money flow is, but it's something to consider when we see just a move in a specific direction. Now, AMD, I had posted a couple of red lines on here. I showed that we were getting, but previously we had higher lows. And then I showed this before where we have this higher low marked on here. And when we can see how that functions. These lines operate in a very, very similar fashion. And especially when we can use those in correlation with the Bollinger Band. That's that blue lines. We have this blue line, and when we touch down towards it, we often see a bounce. So this blue line was actually retreating down, and then we have VWAP coming up off of this outer Bollinger. So I'm running like a double Bollinger system. So there's the VWAP with one standard deviation and then this tight kind of Bollinger Band. And the two of them work in combination together very, very well. When a stock gets outpriced or it's like on the high side, then I often expect it to come back down. But when we hit these lower portions of the Bollinger Band, I like to see price improvement. And you can see that kind of repeatedly happening over and over and over again. And so here we're seeing a push to the upside. Now, are we going to continue all the way up or are we going to pull down? Well, here's the interesting thing. If we look back in time, we've got point of control that being down at 160 still. There's a lot of volume down at these levels, which means that this gap that appeared, and this was a gap that came out on news of a deal with OpenAI. If that gap was to close, there is potential of going down to that 160 level. But here we are with a push to the upside and right back to a very, very high volume level. So if we were to scroll in on the near duration, a nearer term, look at where that point of control is relative to where the stock price is. It's wild. When we see it deviate from these, it often kind of magnets back to them. And you can look at even a tighter timeline. So if we go in here, we can see, oh, well here, look, the point of control is now in the last couple of days is actually lower than, and we have very little trading above. So now the expectation is that this may come back down based on different time frames. Things to consider. We see Ryan's on board. We've got 12 other people. Do you guys have any stocks you want me to look at? We'll take a look. We'll do some analysis on anything that you would like. I want to look at ARKK for a little bit. This is a tech ETF run by Kathy Wood. It's quite liquid. They post a lot of their they post their positions daily, which is quite an interesting setup. I love this stock in general. I find it have high premium, and it's an ETF, so there's no earnings. When we get into a time frame like this where we have earnings in place, it's a really good way to potentially play these. Now you can see how using that Bollinger look again and that point of control, we can see we hit that Bollinger and we're down below the VWAP, which leads us to believe that there should be some slight price appreciation to the upside. And now I've been playing this for the past couple of weeks, and this has been a nice little positive trade because when we get down here, we don't expect a continued free fall once we get outside of the Bollinger, and that point of control is slightly above. So this is an indicator where I might want to take a bullish trade. And we're using a little bit of technical analysis. We're using the options chain to try to get ahead of these trades in general. So let's take a look at Amazon and see where it is in relation to the same sort of statistics. So we're outside of the Bollinger. We got a long play here the Bollinger now has come crushing down. It's actually below the 1 standard deviation off the VWAP. Point of control is back at 231. And from here, what I might expect is that we'll see a slow drift back up to VWAP. Amazon is a very, very strong company. And I think that this price action has been a little bit oversold, in my opinion. So that's something to consider there. And again, these are just my opinions, things I'm looking at. So Costco, at a glance, point of control way down here at 917. These are the type of stocks that I might consider putting on neutral to short positions on. I don't want to get into a position where I have a break even that's too high. I don't want to overpay for these stocks. It's a guaranteed way for when the money moves from one asset to another for us to be left with not having any money left in our pocket. So we have to be careful when trades are trending quite high. You'll see companies like COP here, trading well above its recent price action. And this is due to the increased oil prices. What else can we look at? Do you guys have some tickers? SNDK, sure. The SNDK was up a ton. I know that, thanks David for bringing that up. SNDK was actually one of the alerts that I did with my AI stock picks prior to the massive run up. And why is it not on my list here? So for Drawbridge Trader Club members, they know that I bought this before the explosion. I mean, it had already moved up a little bit, but it was an absolutely massive run. Got into this in January 2nd we bought. So this was when I alerted everyone in the Traders Club to buy, and there was just so many ratings out there. What I do is I use a combination of paid services to do kind of do deciphering of what stocks may move over the month, and then I use all of this AI that is available to us, and I compile it together. I create a list, and I get like a short list of anywhere between 15 and 30 stocks, and I hold those positions for a month, and I reset those at the first of each month. So like right now we're on the 24th, and that means that next Monday we're going to be posting the new trades, and those new trade ideas are going to come out first thing in the morning. So I'll be clearing off my portfolio. Some of them I hold, some of them I carry on to the next month. Typically about half kind of recycle over, because some of those stocks actually get like a pretty good run, on a 2-month basis. SNDK was one of these examples where from January 1st to February 1st, February 2nd was when we got out. Like, look at this price action. So we're actually, it was perfect. It was perfect timing. Like, and I can't say that this happens all the time. It just happened to be that this month worked so perfectly. And this was really based on these AI stock selections that I use. And of course, those are available to you guys. If you want to join the Traders Club, you can head over to Drawbridge Finance. I should just put this up. drawbridgefinance.ca. There's now 2 different ways you can sign up. Please don't sign up for both. But you can access the Drawbridge Traders Club either through wap.com, links down below, or you can go through Patreon. I am transitioning over to WAP. The only reason I'm doing that, that doesn't affect my current members, but the reason that I'm doing WAP is because I've been able to offer you guys even a bigger discount, and I have lifetime memberships available now. So I've been doing this a long time. I've been trading since 1996, so 30 years trading. I've been trading options for 14 years. And believe it or not, I've been posting my trades now publicly inside my group, which you guys asked for. The members asked and said, hey, can you post these? And it's a lot of work for me to do that. I've been posting those for 8 years. Every single trade that I do gets posted in there with all the results. So it's been pretty awesome journey. SNDK. So I currently don't have a position in this. The company is, it's not that it's overvalued right now. I just thought that when we see the move that it's had, that we're due for a potential pullback. And my worry with this type of stock is that the pullbacks can be quite aggressive. So when you're talking about a stock that goes from $200 to $600 over the course of a month, how do you play the downside protection on this? how do you do it? Let's look at, I'll pull up Moomoo right now, and we'll pull up the options chain and just see what kind of money there is to be had. First thing I would do with anything that's had a parabolic move is I make sure that I'm trading with limited loss trades. So a limited loss trade can mean that I can sell a short put. If we're to go out 30 days and just look at the premium that's in these stocks, it is massive because there's tons of risk to the downside. So when I'm talking about a $55,000 position, a 10% on a 30-day period works out to this one right here. So what delta is this? Is this higher than a 16 delta? Yeah, it's 34 delta. And you have to get, in order to get $5,600 on a $58,000, sorry, what is that? 58. Yeah. So max loss 52,000, max profit 5,000. That's 10% return. That is way for the 34 delta. That's crazy. Okay, so let's go on a 30-day. We should only have to get 580. These numbers get so big that when you're looking at these. So here we go. Selling the 390, selling the 380, you're still getting 640. What's the delta? The delta on this? 5 delta. My goodness. Is there any volume on these? 1, 2 contracts. Can you actually collect this much money? Let me take this one off. And again, this is pricing in the fact that we have a ton of potential downside risk. I'm reaching for my manual calculator that I use all the time, but you guys like to see the real math. So let me pull up this calculator here on screen. So I just want to calculate out exactly, just to make sure that I'm doing this correctly. 925 is max profit. I'm looking right here. Max profit's 925, max loss 39,000. So divided by 39,075 equals. So that's 2.3%. That's a wild amount of premium. 2.3% for the 400 put. Now, the 400 put, and as I said before, this is limited loss. The most that I could lose on this trade would be if SanDisk went to zero. And I'm not expecting it to go to zero, but if it did, max loss is 39,075. And so max profit is a 925. That does collect a 2.3% return in 30 days and a probability of profit of 89.67%. So absolutely wild how much potential there is. Now, if you look at the curve, basically that's how much profit you make as long as SanDisk stays above 390. That's where the break even would be selling the 400 put. So, and collecting, even the mid price is showing, I don't know if you get filled for those. There's not a lot of volume on it, but let's go to the chart and just take a look. Because man, that seems way too worth the risk, doesn't it? You got to get excited about massive premium. And then there's probably earnings on this as well. So 400 level is there. So basically, as long as the stock stays above this, you make a 2% return in 30 days. But you're at risk of buying the stock down here at 400. These are, like that is one type of potential trade that I might have. When the premium is this big, another thing I might consider is doing something like a diagonal trade. And let's go back to the table here and make sure there's no earnings coming up, but nothing showing. What if we were to sell a put? Let's just delete this. Let's go to March 13th. And we want to try to build some sort of big tent to the downside. So, where might psychologically there be some resistance or support, some support if there's volume at 105 right at the 500 level. So we just pick those big numbers. And then what we can do is go out a little bit longer and then say, how much does it cost to buy this 500 put here? And so this would be that's a wild difference, isn't it? So max loss on this trade is going to be $714, but this creates a big bullish tent to the, or a big bearish tent on this. What we can do to change this is we just slide the short put over into a position where Now, SanDisk would have to go above 668 theoretically for this to lose money, because I'm only getting into it for $1.50, $150 debit. Max loss is $2,000. Max profit is $2,000. Max profit would be if the stock was trading in 16 days time at $520. So, and then the break even is 477. So if we go back to that chart, we would have to move this break even up to the 277 level, and which is much, much higher. You know, this is where you're taking more risk, but you're trying to get paid for this risk. Now, what I would do with this type of thing is look at what the price action has been. So we had our earnings happen here. So we had earnings, which is a big event. And then how many days has it been since earnings? We've got 1, 2, 3, 4, 5, 6, 7. Well, we can just do it by date. We're January 30th, and this is 24 days. So let's just scroll out and put a vertical line at, let's put a vertical line on the expiration date, which was March, what was it? March 16th, right? Monday. I've lost my mind. One of those days. March 13th, 16 days to expiration. Let's go back to that table. Sorry, to the chart. March. So Friday, March 13th. So the question becomes, like, does that stay in this zone? Do we see price action such that we're staying above this? That 520 being the sweet spot. So if it comes down, it might easily come down to that level. Let's look at TradingView. This is an interesting type of setup. Let's do the exact same thing on here, but we'll do it with the Bollinger Bands. So we'll put on a couple of lines. We'll do that 477 line first. And I'm just going to put on a horizontal line there. And then March 13th, we'll do a vertical line here. And so that is the potential range on that. These kind of setups can work very, very well. Now, if you've got big pockets and you want to really play these, then this is where you add a little short put to this as well. So you can play that diagonal and maybe even tighten this back up to the 500 level. So you've got make this into a calendar. The reason I like calendars is they're relatively cheap comparatively to how much you can make. The max loss is $634. Max profit is $2,600. So this is has the potential of 4 times our capital. The problem is it only has a 39% probability. And the reason that I do this is because if I want to offset that $634 max loss, well, I can just go to and sell a March 16th. We'll do that same date. We'll do that March 16th, 16 days out, and we sell a put that's worth the $600. So here we go. We can sell the 455 put. And what that does is it gives us 3 positions that we're dealing with. So we have 2 short puts, the 500 strike and the 455 strike. And then we're purchasing the March 20th long put. So we have a calendar and a short put together. Well, this is what our profit tent ends up looking like. We now have a max loss of $45,000. We have a max profit of up to $34,000. We have an 89% probability of profit. I'm just reading off these lines here. This is kind of gives us the result of that. And we're open for a net credit. So now all of a sudden we have no upside risk. You know, if the market goes up and up and up, and like if say SanDisk just goes to the moon, we're in a position where we're going to be able to, these 2 short puts will expire, and then we can buy back or sell off the short put or the long put on March 13th. That's kind of the idea with that. So does that make sense to you guys? Does that kind of trade make sense where I'm combining a calendar trade, which has quite a bit of potential, with a short put? And again, this is for only large accounts, because, you know, you don't want to be holding, you know, more than 10% allocation in any single stock. So especially in something that's been run up as much as it have. And then Easy Money wants me to look at Meta and Microsoft. Absolutely. Let's do both of those right now. So first thing we'll do is we'll just zip over to TradingView, and we'll just look at both Got a bunch of stuff in here. We didn't talk about Bitcoin. Bitcoin's down, still down on this trend. Yeah, it's been a serious sell-off, hasn't it, for those Bitcoin traders? And the question is, are we going to get a bounce up? Like, are we going to get a move like this and then a further sweep to the downside? It's a very interesting time. Meta, Microsoft. So Microsoft, when I look at this chart, I can't think that we're going to continue to see much downside. We're way below VWAP. We're way below the point of control. We're basically into territory where there's so little volume. Like if you look at these candles right here, the 387 candle, we have volume at this level, but a lot of it was from back here. You know, this is where the volume was. This gap has completely filled, this earnings gap, and if we zoom in to a slightly tighter time frame, you're going to see that just this is adding to our volume right here. We're just starting to see more and more volume hitting these levels, and there's nothing below here. So if the volume weighted average price is up here at 486, Microsoft's a great company, you know, huge market cap, huge money coming in. They've got lots of AI infrastructure coming up. How is this getting so much downward pressure? So my assumption at this point is go long. That's what I would be looking at. But hard to say, because this is one of those things where we see when people talk about sector rotation and where is the money flowing? Well, it's been flowing out of Microsoft. Let's look specifically at Moomoo, and because it's pretty cool. It's some of the metrics that they show us. So let's look at Microsoft from a standpoint of how much outflow it's had. So if we look on the right here, we can see this trade overview. I'm going to turn myself off for a second so you guys can see the outflow is less than the inflow at this point in time. Lots of small trades, very little large trades. Now this is just today. This is just on the intraday. So this is lots and lots of small little bites, but no big players stepping in. Now, if we look at the daily chart, you can see this outflow has been occurring all these red days. So over the last couple of weeks, there's been just money flowing out. Today, when we look at it, the net inflow is actually slightly more positive. So we're seeing a little bit more money coming in than typical. Now let's look at the weekly, and you can see that Moon was quite smart here. They track the outflow and the inflow relative to the stock price. So you can see this stock chart, this candle chart, actually replicated here in this line version, and we can see that happening. But overall, we're seeing many more days of outflow than inflow. Question is, where do we go from here? Again, my assumption would be that we're in a bullish trend, and but we're currently in a bearish trend, and is that going to reverse? So let me just draw a line on here. So if we were doing this, why does that not do that? Thanks. Macy's, absolutely, Dennis. We'll take a look at that. So does that make sense to everybody? We've got this kind of, we came into the bottom of it. So if we were to draw on here, I'm looking at this thinking from a technical perspective, this looks like a bull flag to me, but we just don't know until the action happens. Where is this going to move? I like to watch. I don't love to do it with so few indicators. When I'm looking at this on TradingView, this same price action, I really think we're gonna, once this catches a little bit of momentum, it's just gonna go screaming back up above that 500 level. We're at 417 right now, but it does not take long for that stock to move. Okay, let's take a look at Meta. So Meta, you can just see these. I talk about these entries all the time. You know, some of these indicators, we just go long and then go short on the Bollinger Band. We had a long here. This one actually triggered quite early when it hit the Bollinger, and then the exit was here. But this long one, I think we talked about this during a stream. And then look at this, it just zip. We had earnings obviously gapped up. Now, again, Traders Club members, I mean, we played that so perfectly. We played that to the downside, played that to the upside, took that off, and then had risk free and basically caught both sides of it. Those are the types of trades where you're putting on like $2,000, I can't remember what the profit was, $2,000 worth of risk, and then it was like a $4,000 return or $6,000 return. I can't remember. It was just like, it was many multiples of the risk on a long duration trade that we played both sides. And it's pretty awesome. Like that's, again, I'm not catching those all the time. I don't want you guys to think that that's what I'm doing, that I'm like, oh, some magician and I'm able to catch these all the time. But sometimes the setups work really well and we catch those things. That's what I was trying to show you on SanDisk, like that little potential tent to the downside. If we see that drift, is it going to come down like from a 600 level? Is it going to come down to 450? Yeah, probably not. It's probably going to stay above that 500 level. And that's why I would be looking at those types of trades that I showed you before, if that makes sense. I see we've got 6 likes, which is fantastic. You guys are amazing. We're going to take a look at Macy's. Please write some other tickers in the chat. Let me know what else you want me to look at so we can continue on in quite a fluid manner today. And we'll just get through a bunch of stocks and look at as many as you want. I'll go faster if you guys post more, or I'll slow down if you ask me to. We're looking at Macy's. Again, these indicators, you see this long indicator off the Bollinger Band, and then there was the short indicator. If we had traded that, it's a nice little move. Now, you can also see that it sometimes misses out on the whole gain. Macy's long here, and the short exit triggered right away. But the stock went higher, but this is not a loss. This was a losing trade. Buying here and selling here is fantastic. Buying here and selling here, fantastic. These are both positive things. So what are we watching for right now? Well, we're seeing that this point of control here at 1935. We have earnings coming up, which is a big one. How do you play this? We look at the volatility. We look at the potential of earnings. I don't love to trade earnings plays without some extra information. Now, I know that you guys don't have it's hard to get earnings information. And in the past, I've actually kind of been quite, I wouldn't say I would be negative about earnings in general, but my results have not been very positive with earnings in general. And one of the recent things that I've discovered is that there is some companies out there that specialize in earnings. Now, I've just posted in the chat a link to a company that I think you guys should check out. Now, this particular link gives you a discount on their service. So it's an affiliate link. You guys should always use affiliate links if you're ever considering signing up for something. But go check it out. I was actually they live stream every single day. I was just in a live chat with them before I started this stream. And Amin, the guy that runs it over there, is fantastic. If you check out Earnings Watcher, use my link, you can get a discount to try it out. It's month-to-month service. What they do is they give you all the stats, and there's tons and tons of stats. Like, it's one of those like deep dive type research websites where you go in and you're like, I want to play Macy's, and what it does is it shows you the past historical moves the day before, the day after, and then it basically tells you whether or not that Macy's is a good candidate for either a long volatility play or a short volatility play, or to avoid it. And I think that if anybody's playing earnings, and if anybody has had the type of luck that I've had in my past, where I was like, I would win a bunch of earnings trades and then I would give all of that money back on one trade, it was not a great outcome. And so what I wanted to do is, if I'm going to continue to play earnings, I want to have a statistical edge. And there are platforms out there that are doing that. They do require a little bit of work, but it's definitely worth checking it out. So click on that link, go to their website. Again, really great people, kind of a little unknown company. There's not a lot of, it's not a super busy place over there, but there's tons of great data. So definitely worth checking out. What do I think about the trajectory of MAGs in 2026? Well, we're seeing that the trajectory so far has been to the downside. So for those that don't know, the MAG 7 we're talking about. So we're talking about like Microsoft, Meta, let's pull up all of them right now and just take a quick look. We'll just blast through them all right from top to bottom. So if we go, let's look at Apple, because I think individually, I think my assumption is relative per piece and not just as one particular stock or the other. So we've got Apple. My expectation is neutral for Apple. That's my trajectory proposal. Amazon, definitely bullish from these levels. What else do we have here? We've got Google. Google's already at the top. I think this, Google's the strongest of all of these. I know that tons of people are marking it as a buy. I think that the play on Google is probably neutral to slightly bullish, but definitely don't want to oversize any plays. So we've got that in place. Meta, I am long Meta from these levels just because we're below the point of control and the VWAP. Same thing for Microsoft. So what have we figured? What have we looked at so far? We've looked at almost all of them, right? So Tesla, again, I'm going to say neutral to bullish on this. We're above the VWAP. Point of control's at 433. If we scroll in, that's going to be even more distinctive. But we do have not a lot of trading volume in this range. That once we drop under the 400 level down to about 360, this last move that we saw coming up when we saw this move happen back in September, this was relatively quick. We came back down, we bounced off this, but this is a quick moving stock. So we can see that in the price action. 437, 320 being those high nodes in there, and just very, very little volume. So it tends to drop through these relatively quickly. Last time it caught bid before we even got into that zone. It somehow bounced right in the middle, which is very unusual. I think this is more typical to move from node to node. And when I say that, I'm talking about these candles, these volume candles. And so this was an unusual price action. But again, it correlates to that Bollinger Band. We can see that upper Bollinger Band here, and we were staying above the volume weighted average price the whole time. Again, we could see some short-term volatility here. We could see continued downside with the trend, but I think long-term, like by end of 2026, I think we're higher from here, if not at all-time highs for Tesla. That would be my call for the end of the year, would be above 500 on Tesla. Did I miss any? Let me know if I did. I think I got them all, but that should be all of them. Apple, Amazon, Microsoft, Google. I think that's all 7. Okay, all on green. Hey, random question. I was watching an old video on a vertical spread where you're rolling a 23-cent credit on a weekly. Aren't you getting killed on commission when doing that for 23 cents? No. I mean, yes, but no. I mean, commissions are part of the game. How much are you, like, I'm not doing that in my account that cost me $7 a leg. That would be kind of crazy. What are you guys paying? I mean, Moomoo charges 65 cents. So for Canadians, $2 or $3 commissions, like 10%. Yeah, it's 10% of the total potential profit. So yeah, I mean, there is definitely a point where you're like, this is a factor. I have rolled positions where I'm only getting 10 cents. And so like I'm getting $10 and then my commission's 65 cents on both sides of that roll. So I'm paying like $1.30. That's 13% of the $10 that I'm collecting. But we have to look at it the longer term game, like how much money are we making? If I do $10 every single week, that's $520 a year. And if that costs me, $1.30 a week, I'm $52 for the year. That trade still made $450 if I was to roll that out. Now, I don't do that for that little very often, but when I am doing those, like you'll see on TNA, this is one of the ones where I was rolling for like a small credit like that, 23 cents. Most of the time I'm not rolling for that little. Majority of the year, I'm rolling in a position where I'm making like 50 to 70 cents and I'm still paying that $1.30. So the commissions can get outsized. What we have to factor in any of those trades is what is my long-term game and what is the long-term outlook of those positions. When I look at a position like my TNA position, it averages just slightly under 24% a year. And I've been rolling that for now close to 3 years. There are times where I'm rolling for very little credit, maybe 20 cents, sometimes even negative. Sometimes I'm paying a debit to roll. So I'm paying the commission plus I'm paying a debit, but that means I'm rolling up to a higher strike. At the end of it, with inclusive of all of my commissions, of my out-of-pocket expense, the capital that I'm allocating, if I'm making a 24% after commissions, I'm doing very, very well for myself. So yes, some weeks, the percentage of commissions are going to be large relative to the amount of credit that I'm getting. But I'm getting a very, very specific trade that I put on, and I'm rolling that on a weekly. Now, if I want to extend that duration a little bit, save on commissions, I give up the kind of sniper aspect of what I'm doing on those long-term, the shorter duration trades. Shorter duration means I have a smaller target that I have to hit. It generally means I have greater extrinsic value decay as well. So we can see that happen. Then we talk about things like gamma risk. If we're in a position where we have, like I was looking at one of my positions right now. Let me just pull it up. TNA this week. So I've got some short 50 calls and I have some short 50.5 calls. This TNA is trading at $54.19 right now. And I've got a couple contracts on those. So we're looking at a value of, what does it work out to? $4.50 each. The portion of that is extrinsic value. So if I was to dig deep into it, let's pull up Moomoo and take a look at exactly what it's worth, so we can talk about it here. So I'm not just rambling without you guys understanding. So if I look at the options chain and I go to this table and I look at the February 26 contracts and I look at this 50, say I'm a put or a call, either one, $4.50 for the call. Basically, I have about 30 cents in extrinsic value. So the question is, this is going to decay over the next 4 days. Moomush is 3 days, but we have today, with Wednesday, Thursday, and then Friday, right? This is a February 27th expiration. And when we do that, this $32 is going to decay over that time period. So this works out to, what does it work out to? 8 cents a day, right? $8 a day per contract. If we were to go out to the following week and we were to look at that exact same position, that 50, this one is $1.20. Now, is it going to decay at the same rate? Because this is 11 days. So it has a theoretical return of just over $10 per day of decay. So if we were to hold this, so it's theoretically making more. But the thing about this particular stock is that it doesn't lose that. The curve is not static. It's not linear. You don't lose $10 every single day. What happens right now is that it might lose $7 for the next four days, and then it starts to lose more money after that. And it really depends on the IV. So if I thought the market was going to rally up, and that's what my expectation was, and we already talked about Russell earlier in this stream, so you know that my expectation on Russell is slightly to the downside. I don't think it's going to go horrifically down, but I want to have a little bit of downside. So I want to play that short duration because I know that I'm going to get that $8 per day in decay on those positions, and if the market does sell down, there's a potential that the total value of that $450, IWM or the Russell and TNA could come down to the point where that actually expires worthless. My $450 in calls, I'm talking about the call here, it could go to zero if this stock went down to $50. And there's a really good chance that we could get there. Let's look at the chart and just mark on where $50 is and why I might want to have that on. So if we did go, say we just dipped down right to this level, then I can make $450 per contract in the next 3 days on the decay. If I was holding these further dated ones, these these 10-day expiration and we had that same move, sure, I would lose some value in there, but I wouldn't make $450. I would probably make like $250. So for these types of trades, I am more than happy to pay a little bit of commission extra. Say I pay, we're talking about the year per contract, $50 in commissions. If I pay $50 in commissions and then 1 week of the year, we have a pullback to that level and I make an extra $200, I just bought myself 2 years worth of commission by playing that weekly rather than doing the 2 weekly trade to try to snipe it every 2 weeks. I want to hold those contracts to expiration. There's a ton of people, and I've made videos about getting out of positions early, like iron condors, getting out of 50%. When we do that, that is great. It creates a flatter curve. But when we are looking at positions, especially like a covered call where there's no upside risk, I don't care if this stock stays above 50 or goes to 60. I mean, I'm making enough money off of this particular position. If it comes down and hits that, I get out and I get a bonus. Next week when I sell that call, I get a huge, huge premium into my account because IV is higher and we're right at the money. So I'm playing that long game, and I don't mind paying a little bit for commissions, if that makes sense. I hope that answers that question. So commissions are part of the game, but you should get low commissions. Did anybody check out Earnings Watcher? I did post that little link, and I'm also going to post a link to Moomoo, and this is specifically for some of my international viewers, because especially in Canada, we just can't get really great pricing for option trades. So Moomoo is one of those companies that gives us an extremely good price. 65 cents a contract is fantastic. Thank you, Fank, about the new website. I appreciate that very much. I worked very hard on it. I would like to say that those things come together. It's like I started building out that website. You guys should check it out, by the way. I'm going to post my website. I mean, you guys know what it is. It's drawbridgefinance.ca, but I've got all of my affiliate links on there, and I've got like some downloads for people to grab, and it's a little bit easier to get to my Shopify store. And then there's some stuff about the Traders Club. And yesterday, even I updated a little thing that shows the performance. We should look at it together right now. Why, I talk about these kind of things and then I don't actually show it. Let me pull up the website and we'll take a look together, and then something will probably break on it. That'll be good to do it in real time while we're showing everybody. So let's just 1 second here. I want to go over to the new website. You can see my happy face here. I've got these buttons. I spent way too much time giving this little fade effect, and I hired somebody out to do it, and then you end up spending a lot of time. Even this, just added this today. I can't believe it's been 30 years this year since I started trading. It's kind of crazy. 14 years during options. We've got 1,500 members in the Drawbridge Traders Club, and now the YouTube channel is up to 64,000 subscribers. So thank you so much to everybody. But what I wanted to show you was on the Traders Club page, this was a suggestion that I had, and I just got it updated yesterday. So this actually now updates real time, this chart. So this is right off of one of my Google Sheets, and so it updates daily. So we started the Drawbridge Finance AI stock picks last April. I posted them, and I didn't really talk about it for the first couple of months. I tend to be a little bit understated with that kind of stuff, because when I'm exploring things, it's really hard to go like all in and say like I'm going to brag about how great this new thing is, because it could not work out in the long term. So what I do is I scale into those things. I trade with real money, I play and I post and I do those things, and I see how it's working over time. And one of the things that we're looking at is just like continued outperformance. Now I have like each month, I have the performance on these, and those are posted in my Discord, so you can see that there. But since inception, this is now posting live, so it updates daily and it updates real time. So if we sat around here, you'd actually see it posting. But just about a 40% return in under a year, and well outperforming the S&P 500. You see in the first 8 months, it did almost 50% higher. And this is using very, very specific types of trades. Now, yesterday, these were both red. S&P 500 was down. We're up 0.7% today. So we're back into positive territory for the S&P 500 for the year. And for the year so far in 2026, the Drawbridge Finance AI stock picks are up 8.72%. So it's been absolutely fantastic. And then, you know, you can go through the site and you can see these are how I do my trades. You can kind of see, you can get to chart these all out. And you can, yeah, there's tons of stuff. You know, I'm like one of those people that I really do love it. I spend way too much time on my computer, admittedly. And I spend a lot of time, you know, doing this thing where I'm like, I provide a lot of content to my membership, and I provide a lot of content for free as much as I can to YouTube. But, you know, my focus is always on my membership, and it has been for years. So I hope you guys are enjoying that, because I like to put in the effort. And then the nice thing is I like to make money with everybody. That's the biggest thing. That's what we're trying to do, right? Okay, what else are we looking at? Thanks, asking, where do I think metals and crypto are heading? Love the new website. So metals and crypto, I'm still bullish on gold. I would not be looking at silver as a long-term play at these prices, but over the last week I would have been wrong. Silver actually outperformed. The gold prices are they're strong for a reason, right? Like, there's demand for it, but there's also safe haven buying. So I think that overall, I don't expect gold to pull back very much, whereas silver, I think, could pull back quite a bit from these levels. You know, being at $87, I think it could pull back quite a bit. Crypto, I don't know, like, you know, everybody talks about like the crypto like seasonality. I can't help to think that big players, you know, we talk about like market manipulation and moves and things like that, and who's buying where and what's going on. And when I look at this kind of price action, I can't help but think that institutional traders are starting to buy some, but they're really trying to get in at lower levels than this. So do we see a bounce? I mean, if I was guessing, I would say we move back up to that just under 90,000 level. It's wild if you look at this low. If you look specifically at this low, it was $60,001. That's where it wicked it down to on that low. How far is it going to go down is the question. Like, are the bigger institutions going to try to take out people like Michael Saylor over at MicroStrategy? You know, are they going to try to squeeze them out? Because there's a lot of money that is invested in those companies. There are a lot of companies that have long Bitcoin positions, like Bitminer. I don't know. It's really hard to say, but my expectation is that we'll see an increase in price, but probably not over 90, and then down. And the question really is it like 50 or 40? You know, like, man, and that would be brutal. Or we just blow right through that and we just go straight up, and by the end of the year it's fantastic. I mean, the end of the year is still far away. We're just barely into the year, so it's hard to make predictions that early. But in the short duration, I think by summertime we'll probably be lower than we're currently at, but I think there might be a little bit of a rally. So we'll see what happens. What else? We all on green saying, I'm in Canada. I use simply IBKR. Yeah, I mean, I use IBKR as well. And so, but Moo for Canadians is cheaper per contract, unless you're doing high volume on IBKR. Fankins, is this chart in Discord or the website? That chart, the chart for the monthly, they're in the I typically post it in the, in Discord, there's a specific chat room. It's members only chat room. For the AI monthly stock picks, it's called. And I really just post in there the day of. So I post very early in the morning before the market opens, all of the new picks. So those are, the idea with the AI picks is I'm trying to simplify it, because from a user perspective, I want you guys to be able to have the best user experience you can, which is like the least amount of effort. And from my perspective, I'm trying to use the most recent data to give us the best potential picks. And of course, this is the disclaimer, like where's my disclaimer button? I'm not telling people what to buy. I'm just telling you what I'm buying. No, that's a big difference. So I am showing you with the most up-to-date research that I can, what I am purchasing on the first day of each month. And then I am telling you what I'm selling on that first day of the next month, and then repurchasing with the capital. And as you saw those results, that's on the website. The results speak for themselves, and that chart now updates real time. So you can see that on a daily. You can go back and look at it as much as you want. It updates. Those updates happen like every 15 minutes. So it's pretty cool. Thanks asking, you may have discussed this already in previous videos, but how do you think the original tariffs being removed affect the markets, if at all? That is such a hard thing, the unwinding of the tariffs, because there's just a lot of money involved. I really think that the tariffs in general, I'm of two minds of it. They're really good for the American economy in that it forces businesses to think about their imports. And so they have to say, okay, when we have something that's being manufactured or a good that's being imported, is there an American supplier that can do it cheaper? Now, there's some things that we're just not doing. I mean, obviously we're not growing enough cotton in the United States or in Canada to compete with the cotton industry in India. So is that going to affect like clothing prices and things like that? Absolutely. The tariffs overall are going to apply to some industries more than others. But in general, when we look at it from a perspective of like how much money is being spent, the overall is that money should be flowing into the United States. Now, the hard part about it is that it pisses off everybody else. So you have now government officials saying, okay, well, we don't want to play very nicely with the Americans because of these tariffs. So there's like that the reciprocal tariffs that occur, and politically it makes for a bit of tension. We can see that in the price of the dollar. Now, ultimately, I think that the president of the United States is pushing to make the economy in the United States stronger. Those tariff costs ultimately land on the backs of the Americans. People in America pay those tariffs regardless of who is charging them or not. And so it becomes just a bit of a political nightmare. Now, in terms of the original tariffs being removed, well, it just depends on how there's like the this or that kind of thing. Like, are there going to be new tariffs implemented? Ultimately, is it better or worse for the economy? How is it going to affect the market? I think that really is on a longer time frame, how much it's going to affect it. Does that make sense? I think that that's kind of all of my thoughts about it in a nutshell. So everything that we know about tariffs gets priced into the markets immediately. So we see that there's definitely credit risk happening. So that is something that we need to be considering in this current market. And with that credit risk, is that partially tied to those tariffs? Could be. I think that it's a complex system. If you look at like the Canadian economy, like I'm Canadian, I think we have a terrible economy. Our cost of living is huge. Our wages aren't anywhere close to our international counterparts. Our housing market is overinflated in price. People generally just don't have enough money to live the way that they would like to live. And there's definitely cheaper places to live in the world. Yet, if we look at like from a domestic standpoint, our dollar has gotten stronger and our economy has supposedly gotten better over this year, even though when you look on like a regional level, you see less housing starts, you see less employment, you see less wages. So I don't know how those numbers really reflect sometimes when you see like our Canadian economy doing great, and then in reality in my own neighborhood we're seeing the opposite of that. So those are the similar sort of things we have with tariffs, whether or not we have is the positive actually positive for the people, or is it positive only from a corporation standpoint? Ultimately, the market is moving up in the United States. The trend is to the upside, whether or not that's in big businesses or smaller businesses. The money is still flowing into the American stock market. Brian says, sorry I'm late. If you haven't already done it, could you go over your Visa no loss trade since it dropped recently? Absolutely. The Visa no loss trade, what specific strikes do I have on right now? So I have the 315 put. So the way that this works, so let me just pull this up in, I'm just going to pull up Visa. I'll just show you how these function. I've been doing a ton of, my whole weekend actually was on no loss trades. I'm going to be posting more and more content on this. The effect of these trades is such that they get played with protection to the downside. So when we look at the options chain and we look at some period of time, say we go out 30 days, what I'm looking for is I'm looking to buy a stock, say we're buying Visa at 307, and I want to put on a trade that has some potential of making money. To increase the probability of making money, what I'm going to do is sell a call. Selling a call reduces my downside risk slightly, and what that does is it gives me a capped upside. So if I was to chart this, buying Visa today and selling the call, then I will look at the curve, and this is what it looks like. I can lose on this trade $29,638, and my max profit is $862. Now, I want to trade this, I want to convert this into a no loss trade. I want to reduce the amount of loss that I have. Well, how do I do that? How do I protect the long position? The only thing I can do to protect the long position is to buy a put. That's all I can do. So if I'm purchasing these shares for 307, can I purchase a put that protects my downside and ensures that I get back at least 307 from today's value? Well, all we have to do is go out and look at that chart and say, well, what can we get this? Well, yeah, sure you can right here. You can just buy a put for the 300 put, cost me 635 bucks. If I spend 635, that's cutting into my my potential income, but it's reducing my potential loss on this. So now my max loss on this trade is now 250 bucks. My max profit is only 250 bucks as well. How about if I want to further reduce this downside risk? Well, I have to just collect more premium. I have to collect at least $2.50 in premium more to do that. And so we'll take a look again back at the table. How could I do that? Could I sell another call, which will give me some more money? Well, sure I can. I could sell a 320 call. Here, all of a sudden, I have a trade. Like this trade has no downside risk anymore. This is the effect of buying a put and collecting enough short premium from selling calls that we're in a position where we have no downside risk. This is a pretty easy setup because it cost me, $298 or $29,000, and I'm guaranteed, no matter what happens, to get 300 bucks back. So if I was to look at my trade itself, I'll pull up like the actual trade. You guys can take a look at how it's functioned over time. Do I even have that sheet open right now? Just give me 1 second. I do have it open, but it's been actually a pretty light trading day for me, despite the little bit of volatility. I have quite a few trades on. Count was down. I was down a little bit yesterday, and is that not gonna populate? This might have to give me a second here. Yeah, there we go. It's working fine. Just give me. So this is in my Traders Club. Any members of my Traders Club, whether or not you sign up through WAP or through Patreon, have access to this all the time. But this trade has been on since April of last year, and at that time, Visa was trading at 336. Now, the idea with this is that I don't think Visa is going to move all that much. I think Visa moves rather static. It moves in a consolidated range. And what I did was I did exactly what we're looking at there. I bought a put for January 2nd. This last trade. This is on a couple different sheets, but this last trade was executed on December 19th. And so at that time, Visa was trading at 348. And I bought the long put for 330 and I sold 2 of the short calls at 340. I also did some other fanciness up here. I was doing some adjustments and I had, multiple trades going on. Let's go to a little bit of a simpler trade setup. December 30th had the 354 and basically, was I still getting crazy here? Yeah, I have 4 short, 3 long. I've got, we've got the long put at 340. I've got 2 of the short puts at 350, and then I had some spreads to the upside. Ultimately, what we're trying to do, I tend to overcomplicate things because I like to build tents, and you can see what I was doing with these. If you look at like where these tents were, I was building these odd tents is what was happening, because what I wanted, I did not think Visa was going to rally up too much. So what I did was I offset my risk, and you can see that here in this yellow. I had less risk on the downside than to the upside. I had more risk here, but I still had a profit 10, and all of these were zero loss. You can see here's my zero line. So the worst case scenario, even when I was in this red trade, was that I was going to make $360 per 100 shares on this trade. Right now, I'm in the February 27th, this blue one here, and I've got the 315s on, and it's a standardized butterfly. So my minimum gain at this point is this one right here when we scroll over it. If I was to close this out now, if I was to just execute the put, I would have made $2,965. And that's because I have this 315 put in place. So I can just plug that in here. I can just show you if I was to close this for 315, there is my profit if I was to do that this Friday at expiration. So even though the stock is trading down at 305, because I own this put, I can force this trade to close for a credit of $31,500. And my total debit paid so far is $28,535. So the question becomes, what do I want to get into next? What do I roll into? Well, this is mostly dependent on where the stock is trading. So what I'll do with something like Visa is I will go to the chart here. We'll take a look. Where do you guys think this is going? I would love to know. Are you bullish, bearish? What do you think on it when you look at a stock like this? So we use all these metrics. We talk about all of the things that we've talked about during this stream. We're looking at that point of control. We're looking at these Bollinger Bands. We're looking at VWAP. We know that a lot of this pressure to the downside has come with the capping of credit card fees, which just like so it's crazy. I think this is unwarranted, and I think that we're gonna see a move to the upside closer to this point of control. Now, is it gonna go back to 346? No, probably not. I would expect we're gonna go back into this level here, like the 320, 328 area. So how do I play this moving forward if that's my assumption? Well, I can play it however I like. Let's go back to Moomoo, and we'll set up a potential trade here. So we're 30 days out. We've got the 305 and or the 300 put. Well, if I think that the stock's going to go to 320, what I want to do is I want to center my puts at 320. So let me erase these. So I'm going to do 2 of them. And this is a butterfly. And I have learned with Visa that it likes to be, it can be either $5 or $10 wide, or you can go up to 15, but you'll end up with a potential loss. And what I need to do now in order to cap the loss on the upside, because this does have unlimited loss to the upside. It shows it right here, max loss, unlimited. How do we protect an upside move? Well, an upside move, we buy call. So we go to the table and we go down here to the 330 and we spend $220 and we buy a call. And what that's going to do for this particular segment is that gives me a profit tent where I think that the stock may trade between 311 and 328. I think right now we're a little bit oversold and we may see a rebound. If I decide to take this trade, this is going to cost me a debit to get out of my current position. This trade in itself has $120 max loss. But look at where I am in the trade in general. I'm already 2,900 in guaranteed profit. So what if I put $135 into this? What's going to happen? Well, it's going to just mean that I'm going to have $135 in it. Let's load this up in the Rourke. You'll see how this works. So I just populate this out. I can say, okay, we plug in all of the data, right? So there's going to be a cost to close the current trade. And then there's going to be a debit to open the new trade. So the debit to open the new trade is going to be 135. Sorry, the mid price. I'm going to take this off. I don't have to do the shares, obviously. So the amount that this is going to cost is going to cost $386. So that's going to be my very first portion that I need to put in. That's what I'm going to roll into. And then I'm going to be doing the 310, 320, 330. So let me put in a little formula here. I'm going to say equals minus 386. And then the position I'm moving into is going to be the 310, the 320, and the 330. $10 wide butterfly. And I'm just going to copy and paste just so you guys don't have to watch me type. And the only other thing is that I want to factor in is what is my credit going to be? Because this is going to show I'm not the right trade when I do that. So see how it's showing this is like $2,000 loss or $2,000 gain. It's way down here. That's not right. The reason for that is because I'm going to get a credit to close my current position. So I don't have that position in Moomoo, but let's see what credit I get for closing the position that I have on. And if we go to February 27th, I currently have the 315, which I'm going to sell. And then I would be buying out the 325. That's all I'd have to do is buy out 2 of the 325s. So I would get a credit of $818 for this. So I'm going to go back to my sheet and I'm going to plug that in as the rest of my formula. So I've got the debit to open the new one plus the credit to close them. And what did I say? 808, something like that. So I'm going to get $422. And what is that going to do for this profit tent? Well, that is going to decrease it a little bit, as I said. So I'm going from $29.65 to potentially only making as little as $28.87. But I've moved this profit tent over, and that's the whole goal. I'm trying to target where I think Visa may go. So that's how I play this. I move the tent around depending on where I think it may go. Stock is trading here. We can see that charting again, 15-minute delayed data, but almost real time, this update. So I'm thinking about positioning my position here. Now, if I want to be a little more neutral and I want to trade it right where I am, I could. It would be easy. It would just change those parameters. I would just go over here and I would say, well, what if I didn't buy the 310 put? Instead, I bought the 300 put and then sold 2 of the 310s and the 320s. And this is where the RORC helps you so much, because the debit is going to be different for this one, right? So I'm going to subtract this debit out. I'm going to go find out how much it is. And let's go plug those numbers in. We know we're going to get I put it in wrong, 818. So in credit, but I put it in 808, but that's fine. So March 27, 30 days out. And if I was to buy the 300, sell 2 of the 310s, and then buy the 320, so I'm going to increase this here, then I'm going to get a credit of $6 for this. So that could be the type of play that I take. So I'm buying a put, I'm selling 2 calls, I'm getting a credit of $6. Now remember, I'm moving down further. So let's see how that affects us. So let me go, this is a credit of $6 and then a credit of $8. So we'd get $1,400 today. And that would be the new profit tent. It would be inside of the tent. And I would still have about $2,873 in risk. I can move this tent pretty much wherever I want, because the cost of those butterflies is quite relative. I might want to expand out my chart here a little bit, and so I can see where it is. But that's effectively what I'm looking at. Where do I think it's going to trade? So if I think it's going to trade between 300 and 320, then I just target 300 to 320. Does that make sense? I'm going to be doing a video on a variation of that, because it's been a fantastic trade. I have no complaints about taking no risk. You guys can see how it works. I own a long put, so I can just force somebody to buy that. We're already at 12:17. What is going on? Today has been wow. I'm in a different kind of mode today. Obviously, we're just going through it. through it. We still have some people here, which is fantastic. I appreciate every one of you. I'm going to call it here though. That's it for me for today. I'm going to go back into my chat room. Look, I've lost my brain. I can't even find the button. Hope you have a fantastic rest of your week, and we'll see my patrons on Thursday. And sorry, I'm gonna stop saying that because Drawbridge Traders Club can now be joined through Patreon or through WAP, your pick. You can join the Drawbridge Traders Club. That's what I'm saying now. So let's get rich together. I will see my Drawbridge Trader Club members on Thursday, and of course, I'll be in the chat room in a few minutes. Thanks so much, everybody. Take care. Bye.